All right, what's going on, party people? Billy here, Storm Trades, with yet again another trade recap. This time we're going to go through my CL futures long trade I took on Tuesday, July 8th during the AM New York trading session. This trade is a good example of time frame alignment between the daily and the hourly charts. Um, let's get right after it. All right, so starting on the daily chart, that's what we have right here. Okay, whenever I'm looking at the daily, I want the chart to scream bullish or bearish at me. I want to clearly see the narrative happening and understand where price is likely to draw to. So, how do I start this? I start by just marking out the previous daily low, marking out the previous daily high by running a fib from the previous daily candle just to sort of see where we are currently trading, right? This is already sort of telling us a little bit of a story here, right? We are already trading in the upper quadrant here of the previous daily candle. Okay, if I was expecting price to go higher, I would want to see a wick form here, but to be supported by the 50% and then expand higher. But there's more to this story, right? We want to take a look here. We have a liquidity raid, and when we liquidity rated, we did that into some internal range liquidity. Price books from internal to external and vice versa. So when we have price that's most recently delivering out of some internal range liquidity after sweeping a previous daily low, we would expect price to move higher and to seek external range liquidity. Now, we don't have external range liquidity for a very, very, very long way up. However, we do have another very large fair value gap up here. And so I would be targeting, and I was targeting eventually us to reach the midpoint of this bull or bearish daily fair value gap, right? Now, to me, this is screaming bullish daily bias. Okay, it makes total sense, and I would be looking for some sort of an open low, okay, to be supported here by the midpoint, and then a higher close up into the lower quadrant, up and possibly even to the midpoint of the daily fair value gap. I don't need that. I'd like to see a move up to the previous daily high, right? So that's the most recent, that's the closest liquidity pool that I would be targeting. All right, now moving on to the hourly time frame. I pull up the hourly chart here, and as you can see, it's the just beginning of this week. We've already been telling a story. First things first, let's mark off here. This is the change in the state of delivery, right? We had lower highs, uh, lower highs, lower lows, lower highs, lower lows. And then at this point right here on Monday, right, we had a series of very strong bullish candles. We have changed the state of delivery. Whenever we can see a clear, and by the way, we did that inside of a daily fair value gap. So that makes sense. I'm going to pull a fib right here from the swing low and from the swing high to the swing low that took that liquidity and start to see where these levels line up here. And I'm also going to pull the ADR levels and see where those are lining up. So I do want to make note at the negative 1.5, the minus 1 to 1.5 has been traded into, and as expected, we are now consolidating, but we have not reached the minus 2 to minus 2.5 yet. I would expect us to reach that later in the week. But right now, I'm focused on this 1/3 ADR. I love targeting that. You'll see that in almost all my recent videos, right? So I love that 1/3 ADR is lining up with the previous daily high, which is going to be my draw on liquidity. Okay, I'm just going to move some of this over here. And all right, now when looking at the hourly time frame, we want to see the most recent. I want to look at the most recent price action, and are we currently delivering from any sort of internal range or external range liquidity? We did sweep some liquidity here in the form of a swing low, but we also we closed strong above the series of down close candles that did take that. So I just marked that off as an order block. On the hourly, I don't use order blocks as a POI, but I do use it as a way to chart narrative, right? So I'm expecting higher prices. I would want to see opposing candles supported after taking liquidity like that. Now, if you take a look right here, we actually have a fair value gap. This is our hourly POI. That is a prerequisite for us to have had traded into and start to deliver from in order for us to go to the M5 execution time frame. This was the 9 o'clock candle. So it is during the time that I trade oil. I trade oil from 9 a.m. until about 1:30 p.m. The cash open on oil is at 9 a.m. So I'm ready to engage the market. I am looking for higher prices, and that makes sense based upon the daily bias for me and the hourly market structure narrative. So let's go down to the M5 time frame. Now on the M5 time frame, I am looking for a sweep of liquidity and then a displacement back up into the range, producing a change in the state of delivery on the M5 time frame. And so we will follow price here, and immediately we get a down move. And look at this; it actually to the tick goes down to this order block, and we see support off of that. I will make note right here that we had a let's see. There's our liquidity rate, right? And here I would want to see us close above the change in the state. This would be a change in the state of delivery if we closed above this down close candle that took this liquidity. If this doesn't happen, I will just continue to watch price and keep watching for these liquidity rates and then a move back up into the range. Here, I'm just going to follow price here, and already it looks like we're trying to close above it, and boom, that is displacement right there. Now, this is pretty far away from the change in state of delivery. I'm not going and I didn't want to chase price here, right? And I didn't notice right away that we had this. Well, we were forming a. I'm going to move price forward here. We formed a fair value gap here, and at the same time, we had confirmed a breaker. So we actually had a unicorn right here, but price was still pretty far away. And at this point, I was going to wait for some sort of a retracement and then take a continuation trade on an order block up to the 1/3 ADR or the previous daily high. Okay, so let's watch price, and I'll show you how I get on sides on an order block continuation. There we have a down close candle into the liquidity, right? So this is into the interrange liquidity, and at this point, I will mark off this series of down close candles, and just like we did earlier, as we're watching price, waiting for the reversal, I'm doing the same thing here, waiting for a continuation setup. As long as the 1/3 ADR has been taken or the previous daily high, we still have room up here. I will look to get involved on the continuation, and that's exactly what I did. So on the very next candle, we have a close above the order block, which is close enough, right? And at this point, I entered in on a trade with the stop below the swing low here, and I will do this here on the replay, right? So buy a contract here, stop below, and take profit up here right above the previous daily high. On this particular trade, I went to break even once we got to the 1/3 ADR, and took a contract off there, and then let price go up to the previous daily high, right? So actually, this is where the trade went, and it was about 1.59 R. Okay, targeted the previous daily high, and let's move price forward here. We got tagged in, and boom. Once again, looking at the 1/3 ADR as a nice draw on liquidity. Combine that with the previous daily high, and I consider this a plus setup, given we had a daily bias that was bullish and hourly market structure that aligned with that. If you guys got anything out of this at all, I really appreciate a like, subscribe, thumbs up, comment. Thank you guys for watching, and I hope you have a great day.